Hello and welcome back to Precise Algorithm Trading. It is Thursday, May 25th, 2023, and I got some other stuff to show you guys today. It's more than normal, I guess. I got something I was thinking about. We'll get into it. It's in the automatic trading system. So let's start like we always, well, generally do. So here's the markets, and this is the S&P 500 E-mini futures contract, and this is over here on the right-hand side where the crosshairs are. Um, that that's a doji candle, followed up from what was, I guess that's a hammer candlestick from yesterday, and then this is the bar that's starting for tomorrow, and it's starting down. However, it's green today, so it flipped from a sell signal to a buy signal, and it's in a squeeze. This is a Keltner band and Bollinger Band squeeze going on. That's the red dots across the middle of this thing. So that's all on the daily chart. And I do want to say, I mean, there's nothing wrong with if you were in a trade. I maybe show it better with a stock over here. Like pick one that's ugly. Intel. So Intel here is bullish on the weekly over here on the left hand side. Bearish and has been. Well, we got a sell signal back here on 418, and it's been red ever since. We had a buy signal here on 510, and then immediately on 511 we flipped back to a sell signal. But we're bullish on the weekly, so I held through that. There is nothing saying you have to hold through that. You could just get out until you get a good buy signal, which I don't have right now. And this weekly could turn into being bearish again and to give me a sell signal. So we could trade this totally off of the daily and just be, you got to be more into it every day. And like when you get that buy signal, that would be like a time to potentially get in, especially since it was oversold on the True Momo indicator. We had, um, I mean, oversold conditions just in the bottom zone, and not near as good as when you actually get all the way into the green bottom zone here. That didn't make it all the way down. But literally, there's an argument I shouldn't even be in this position anymore and taking the heat. Uh, but there's also an argument for me. It's like I bought in, and it doesn't cost money to trade stock. I mean, technically, there's no commissions to it. So buying into that and holding through it is it's a little painful, but we were oversold, and if I do get a sell signal on the weekly, I'm just going to kill the whole thing. So that's just an example. I got a couple of them, but Lowe's. This is an interesting one. I mean, literally had bullish and then had earnings that were relatively bullish, and then sold off the next day, and it's down today. I mean, it could have got out yesterday, wouldn't be down today. But again, I got a bullish signal and buy signal on the weekly, and it was after decent earnings, not great earnings, but decent earnings, and so I'm willing to hold through some heat, but there's nothing saying you have to. Let's look at Nvidia just because that was what the big news was today. Big pop, and yeah, I mean, obviously, I mean that was bullish, and it had bullish everything, and it popped nicely, and so I wasn't in, but maybe some people caught that, and even on this call, but or on this that watched this video. So, anyways, that's it was bullish and bullish at the same time. So, and it's got some back and forth here too across the last month. And again, that could chop you to pieces, but it doesn't cost money these days to trade in and out of a stock. So there's nothing saying you couldn't just trade in and out of that. So if you got the patience for that. So let's go back to this. So The point being is it's been back and forth. We're back to a buy signal now. We got target dots to the upside, and yeah, that's my whole point. Let's go to the Russell. It's a bearish signal on both time frames, and the new candle starting tomorrow. So I actually do have a Russell position that I initiated off of the buy signal back here. So I'm going to, or actually I think I did it off of a pullback after the buy signal. So I'm going to either have to set a stop underneath or just get out and get back in again. The Dow has been down. We had a potential for a rally here, and then we got a flip over. So this market is just, it's a little in turmoil, and then the Nasdaq's been running higher and ran higher a little bit more today. So oil has, there you go. So you got a reverse up and a reverse back, and we don't have anything that's got much follow through to it. IYT went up today. Yeah, quite a bit. And again, this is in a chop zone as well. However, that's arguably an inverted head and shoulders pattern that if we break the neckline here around 229, we could go all the way up here to 238 would be my guess if I measured that up, maybe even a little further. TLT is bonds. I'm out of bonds again, and this latest one was a loser for me, but you know, this is actually, it trades, when it does, it trades pretty, I mean, you can catch some trends, so up and down for what it's worth. And then that's good enough for the markets for today. Let's look at the bullish percent indexes. So you go to stockcharts.com, you type in bull, and I already did that here, and the Dow Jones Industrial Average really got pounded today, down 21%. That is the kind of bearishness that can potentially eventually, that's a rhyme, lead to too many bears getting on one side and then it going back the other way. Down 2.99% on the NYA. The transports, we saw they went up. They went nowhere here, but they went up in the actual ETF. The NASDAQ here went down by 2.39%. And really waiting for this thing to rally here because it rallied and made a new reversal. If this thing rolls over, I'd say we're in a world of hurt. And if that happens, it's going to need a catalyst like this debt ceiling or something like that. The SPX, that's the S&P 500, tacked on an O to the downside. And the OEX tacked on two O's to the downside. And the NDX flipped over to a column of O's, so at minus 12%. So pretty volatile action. Obviously, and we also had the doji bar today, the back and forth. Flip back here and hopefully it'll cooperate. That back and forth with a small body in the middle and basically wicks up and down, it's, you know, that's an indecisive candlestick. And then I'm going to leave you with the new part that I wanted to show you guys. So I show you this a lot. Here's the YM. That's the Dow futures, Dow E-mini futures contract, and this is the latest action. It tried to get up and go in a little bit today, and then it went back down again. So this is our equity curve. So this is the results of trading, and this is the quarterly contract. So basically you have to change the quarterly contract every quarter, and then you can look at it like this, and this is 6 months worth of data, and this is still just your equity curve. So this is what your equity is doing. It's going, what you want to build, I mean, you want to have an equity curve. That's our automatic trading systems trade automatically, and they're made to have an upward sloping from lower left to upper right, rising equity curve. But this is really what this looks like on a chart with price action. And so over here, the light blue line that from up where it went, this is a short trade, and that was a winner because it's light blue. There's some little trades in here in the middle that was a loser. This is a big loser right here because it's red, where it tried to go long but it got stopped out, and that's what these things do. So that net result, this is just today, it looked like this. Whoops, go back to that. Looked like that. So it's going to be a little clearer when I show you on the next. So here's the Russell 2000, and this is the recent couple days or couple trades. One up, a couple down, one up, and then looks like one down. And if you look at it, so we got some. This is today. We got a winning. Whoops. A winning trade there, and actually a couple of losers back here. So this isn't the one I was going to say looks clearer, but this is what it looks like on a longer term. This is 6 months basis, and we do have an upward sloping, even though it's a little volatile, especially in this dip valley right here. It's an upward sloping equity curve. So the one that where you really see it is the NASDAQ. So this is the NASDAQ, and it's the one that slopes up the best, but we still have valleys like this one here, and we've got this recent one. But you can see that right there was a nice trade. At least I can see that. This is what it looks like on a chart when you get one of those kind of trades. This is, I think literally we had 2 trades today, or maybe 3, and there was a little, I think, winner there. I can't tell if it's, I'd have to go look at it and really and analyze it, but that means there's a little trade down there and then a big winner. And so this is based on account size, but doesn't really matter if you only, I trade, I think it shows on here, yeah, -3, so that's 3 contracts. You could trade 1 contract and it's a third of the value of this, but you'd still get this kind of a pop. I mean, that's a big, that's almost as nice a winner as you can get out of 1 trade. So, and then you add all those together, those types of trades together, and this is what your equity curve looks like for 6 months. So hopefully that helps you understand a little bit better, and if you guys want any more like that, let me know.